All right, so the market gapped up a lot higher this morning. I guess fueled on good news from Tesla. Seemed like they had some good numbers come out. But as of right now, the markets are negative. Nasdaq's down 0.7%. S&P's down 0.5% after being up like 1.5–2% earlier. So that's why I'm keeping my my downward bias. Just a tough tape. It's very heavy. So you can see my portfolio is structured 53% with a downward bias. I got 34% with an upward bias and then 13% neutral. So I'm keeping this until we can see some improvement in the overall technicals of the market. New names on the watch list: Avis Rental. And it's got this really long, drawn-out cup, and then maybe here's a handle, but it did break out yesterday, kind of coming in today. Interesting. We'll keep keep an eye on it. If you look at the weekly, a little more pronounced, but you can see here that this could be an important level. We're going to watch it and trade it and see where it takes us. Ionis Pharmaceuticals. This is again here. So this is long cup formation here. Broke out really solidly yesterday. Coming off a little bit today. So on the weekly, you could see it kind of broke through its 20-week, its 50-week. It seems to be coming higher. I think this 20 and 50-week may be crossing soon. If it comes back down here and retests those moving averages as support, maybe there's an upward bias trade there. This is Rexford Industrial Realty. Nice little cup formation here after a decent run from about 54 up to 80. Came in, tested these moving averages, gapped up and broke out yesterday. Coming off a little bit today. I'm going to see if this maybe $80 to $82 level holds. Maybe trade it with an upside bias. Same thing on the weekly here. It's had a really strong run, riding this 20-week all the way up. Had this nice move on the weekly. I'm liking the way these, let's see if it comes back and retests these moving averages, but a really solid upward sloping long-term trend in place. Trade to the upside, maybe. Here's McCormick. McCormick had this good run, then it's had, kind of forming this ascending triangle formation. Broke out yesterday. Following through today in a rough market, it's always a good sign. Let's see if it comes back up here, can retest this maybe 103, 104 level, and find some support. We'll trade it to the upside. I also like on the weekly that pretty good breakout here. You see over here it tried to break out, but it failed. So here we have the breakout. Let's see if we can stay above this breakout area for a little while. Maybe come back, retest this area, and then we go ahead and take an open bias. Western Gas, another cup and handle formation potentially, or just maybe just a big cup off of a decent run. Let's see if it breaks out and can keep this as support. On the weekly, really solid uptrend, right? This thing is just hits its 20-week, hits its 20-week, hits its 20-week, and bounces off of it. I'd say if this on the daily, if this thing comes back down, can retest this level, maybe around 24.5, 25, and hold. We could see that about 24, call it 24 and a half. It's on the 20-week, so I think that would be a good buy point and try to ride this thing a little higher. So this is Hca Health. Good breakout yesterday. So this was a key level here was like 260. Hit it, failed. Kind of broke out, rode it a little bit, broke down, rode it a little bit. But yesterday was a pretty decisive move. Today it's off a little bit, but it's really not doing so bad in what's turning out to be a miserable market. On the weekly, just really finding a lot of support around this 20-week. So if this thing were to pull back, like we said on the pullback, if you could On the daily, if you see it pull back, maybe this 270, 265 area, find some support. On the weekly, that 20-week moving average is about 250. So, I mean, there's some support in that area. I'm going to wait for it to come back down and see if we can hold it and trade it to the upside. All right. Netflix was a disaster yesterday. Massive sell-off, terrible earnings. So this is a key level here. So this is around 325. This 500 is a key level. So I mean, there's going to be a whole bunch of headwinds as it tries to get up here. So what I'm going to do is I'm going to wait for this thing to kind of recover a little bit. It is down another 4% today. So this stock is a mess. But if we can see it recover a little bit, you know, and it's going to run out of steam somewhere in here, we'll take a downward bias to it. On the weekly, this is just a disaster. That's all I have to say about that. Shopify. Pretty nasty downward trend here, so bouncing off this 20-day. Tried to break out here, but failed. Sold off pretty good yesterday, following through today, down another 7%. So this thing appears to be broken. I think this 500 levels is a key level. I'm going to see if it could find some support here, stop the bleeding. If it comes back up and retests this area of headwinds, we call it 500 to 550. I think it could we take a downward bias position on it. AutoZone. I like AutoZone. I like this cup, this handle. Nice little breakout here, a little follow through. I'm going to see if we can pull back here and kind of hold support here. I guess that's 2100, 2150. Very expensive stock. You've seen the same thing on the weekly. Nice little cup here, broke out. So very clearly in an uptrend, a longer term uptrend on the weekly. So when the time comes, if I want to take a longer bias on it, I feel comfortable that the trend is my friend in this case. How about Diamondback? So here's Diamondback. It's on the daily. It's not super exciting, but I will say that it is trending higher. Its 20-day and its 50-day are trending higher. It's been holding these levels like a champ. So it's coming back now today to retest the 20 or the 50. I'd be inclined to trade it to the upside for a quick trade if it were to come back and retest these moving averages. Same thing on a weekly. Solid uptrend. I'd like to see it come in a little bit, and I might just trade for another bounce higher. I like this pattern a lot. So it had this magnificent run, had this flagging pattern, broke out solid yesterday. So the difference between the bottom of this one, which is 81, up to around 97, should be the run as it breaks out of this flag position. So I like it. I'm going to wait because it's such a soft day today and see where it goes. On the weekly, just looks really good. Solid uptrend. It's following its 20 and 50 week. If I could see it maybe pull back and retest some of these moving averages on the weekly, I'd be inclined to take an upward bias to it. Right now, this MACD is all the way up here. I think it's going to come down. It's going to pull back a little bit. But if I can pick it up somewhere around the $90 area, that'll be a big win. All right, I'm going to go over some of the trades I did today. So let's go to trade list. Paychecks. All right, so paychecks. I went long calls. Kind of like this. So this is the weekly. Kind of like the uptrend. Came in a little bit yesterday, but it's following through today in a soft market. I might have been a little early on this, but that said, I went all the way out and I bought these calls. So if I look at the paychecks here, I bought the June 17th 140 strike price for $5.10, and I'm anticipating that before expiration, on or before expiration, which is June 17th, this stock will be north of $145.10. Waste Connections. Another really good looking chart, right? Another good looking chart here. So this thing has been in a solid uptrend, following its moving averages. Broke out, kind of came back down, sitting here. It's having a decent week. How's it doing today? It's off today in the weak market, but it's holding its 20-day. I'm anticipating this stock is going to be north of 145 on or before expiration. So what I did here with Waste Connection is I went ahead and I bought the June 17th calls, $140 strike price, and I paid $5 for them. Tenant Health. So on the weekly chart, strong uptrend. It's been holding this 20-week pretty solid, having a good week. This MACD histogram is starting to curl higher. I like this for a long play. So what I ended up doing here is I bought the calls. These are June 17th calls. Strike price of $90. Bought them for $5.35, which means that I am anticipating that on or before my June 17th strike, this stock will be trading north of $95.35. So I feel pretty good about that. Arthur Gallagher. So here what did I do? Yeah, so I went long calls on this one as well. So the weekly chart, really nice uptrend, solid uptrend. And we got this the blip here in 20, but I mean, man, this is like a thing of beauty. I am anticipating that this trend is going to continue. So I basically went ahead and I bought the calls. I bought the July 15th calls with a 190 strike price. I bought them for $6.35. So ultimately, I'm expecting that the stock is going to be trading above $196.35 on or before strike. So, which is July 15th. So I gave myself a lot of room. 195. I mean, it's not on the chart here, but I mean, I could definitely see that happening by the middle of the year. I did a lot of calls today only because I don't want the portfolio to get too biased, right? So I did put in some upward, even though we're in a down market, it's a weak market. At some point, it's going to improve. Or maybe not if we're heading for a recession, who knows what the Fed is going to do. But in the end, I'm trying to keep this portfolio somewhat balanced. I do have a tilt to the downside, but I do have to keep strong stocks with an upward bias just to keep it balanced. So that's why I did a couple of long trades today. All right, where was I? American Tower. All right, so American Tower. Here I bought the calls. I'm not super crazy about this one. I do like the fact that it broke out of its 50 and its 20-week moving average. I like the fact that the 20 and the 50 are going to cross in a bullish way. I also like the fact that it had a strong week. But I'm anticipating that the stock on or before strike is going to get north of 282.20. So there's my break-even point. Can it get there? Let's see. So what I did was I bought the calls. These are July 15th, so I gave myself a lot of room. So I bought the July 15th calls. I bought it with a $270 strike price. I paid $11.80 for them. I think we might have a shot of seeing this stock up here in this green zone by July. Last one on the long side is Progressive. I just got this one filled. Progressive. Went long. Really, really solid uptrend, huh? On the weekly. So this thing has just been riding its 20, its 50 all the way up. This week it bounced, it hit the 20, bounced off it. So I feel pretty good about it. What I did here with Progressive was I bought calls. These are going out to August 19th. I went out, gave myself some breathing room here. I got a $120 strike price. Bought them for $4.10. I'm anticipating that on or before that August strike price, that will be north of 124.09. So doesn't seem out of the question. All right, so I did do some bearish stuff today. First thing is I put on a bearish call spread. So if I go to Paramount, so Para, this thing traded off yesterday, I guess in sympathy with Netflix. This doesn't really look great. So what I did here is I'm anticipating by next week the stock is going to be trading below 36.09. And in order to collect that premium, what I did was I sold the April 29th calls, 36 strike for 22 cents, and then I bought the April 29th calls, $37 strike for 13 cents. So that spread, it's a high probability trade. I might be able to keep that spread, but I also, given the way the chart looks on the weekly, I also went ahead and I bought puts on this. So I'm anticipating that on or before expiration, the stock's going to be below $30.44. So what I did here was I bought the June 17th puts with a $32.50 strike price. I bought them for $2.06. When did they report? So they're reporting May 3rd, well within my expiration here. So who knows? Maybe we'll have another Netflix episode and be able to capitalize on it. So that's my put position. Hca Health, really miserable looking on the daily. This thing broke through yesterday. It's 20, it's 50, really following through on the downside today. On the weekly, not much here, but I mean, you can see this thing sold off hard, downtrend, came up, tested this 20 week, and it's just really getting destroyed this week. So I am anticipating, I bought the puts on this. So I bought the July 15th puts, $20 strike price. I bought them for $2.32. I'm up pretty good. I'm up like 16% on them today. But that said, I'm anticipating that on or before that expiration, the stock will be below 1768. Doesn't seem out of the realm of possibility. They're still driving this market down below us, huh? It's crazy. Okay, Wix. Pretty lousy looking daily chart. Trending lower, riding this 20, this 50 day all the way down. Came in, tried to break through this 50, failed through the 20. Had a miserable day yesterday, following through today with a miserable day. On the weekly, it's come up here, try to retest this area near the 20 week, but it's just really in free fall at this point. So what I did here with Wix is I bought puts with a July 15th expiration, $85 strike price. I bought them for $10.80. So, I just got an order field. So what I'm anticipating is that on or before that expiration, the stock is going to be trading below 74.20. Doesn't seem out of the realm. Videos are really long. I'm sorry, but I just got to get all the trades in. So this is Fastly. clearly, so this is the daily. It's sold off hard. It's been in the downtrend. It's been riding this 20. Broke through yesterday, following through today to the downside. I think it's a short, or I'm taking a downward bias to it. What I did was I went ahead and I bought the June 17th puts, $18 strike price. I bought them for $276. So I anticipate on before that expiration, the stock is going to be trading below 1524. I'm hearing myself getting filled on orders here. I'll go through them tomorrow. So anyway, that's it. Downside bias, fastly. Two more. AGL. Another ugly looking chart. Been in the downtrend. Tried to consolidate. Tried to change direction, but really broke through the 20 to 50. Heading a lot lower today, down 7%. If you take a look at the weekly, not much history here, but this thing just, it's really been in the downtrend. It looks ugly. So to take advantage of this, what I did was I sold the July 15th puts with a $20 strike price. I'm sorry, I bought the July 15th puts with a $20 strike price for $2.60. And I'm anticipating on before the expiration, the stock will be below 1740. Last one is going to be Meta, Facebook, Meta. Just broken. This is a really nasty gap. There's going to be a ton of headwind here. But nasty day yesterday, I guess, in sympathy with Netflix, its fellow FANG. Today, getting smoked, down another 5%. On the weekly, this thing looks like it's about to break down. So I'm taking advantage to the downside. I bought June 17th puts, $195 strike price. I bought them for $14.87. So I'm anticipating that on or before expiration, this stock will be south of 180.13. I also did a call spread, a bearish call spread on these, which I think I just got filled on, but I'll go over that tomorrow. All right, that's it. Long enough. Thanks.